Welcome back here, tuned into Editors Roundtable. Well, before we move on, Mihir, I wanted you to get your view on this space. You know, SPIVA, they came out with the note, and SPIVA basically, they compared the performance of actively managed equity as well as debt mutual funds with the benchmark index. And, you know, the key finding out here is there's been a big underperformance of actively managed funds if you compare it with the indices. And they've looked at both the segments. That's the large cap. In 2022, that was up by close to 6% odd. And 88% of those active funds, they underperformed. It's getting a little scary, right? And from the broader markets, that's the small and the mid-cap funds, well, that index was up to 3% odd. But the underperformers were nearly around 55%, you know, in comparison to the benchmark indices as well. The question is, will active funds now make a comeback? You know, because in times of volatility, it provides the best opportunity. In a growing economy like India as well, you'll get those select stocks that will do quite well. And this period of underperformance from active managers or active funds could be coming to an end. I was looking at the flows as well. Incremental money has been going to passive funds because of this underperformance of active funds. Mihir, I want your comment on this. Do you think the time has come? Because, you know, you wait for those few years. It just requires 1 year to get this entire underperformance, you know, outdone.
So you're asking for a self-appraisal.
If you want to take it that way, I try to put it subtly. But what do you think?
No, see, it's always, I've been here for long enough to figure it out. Hopefully, you know something about it. One is, it's always easier to outperform in a trending market.
Yeah.
So if you look at the big periods of outperformance by active managers, it's periods like 2003 to 2008. Big outperformance, you know. From 2014 to 2018, significant outperformance. From the bottom of 2020 till say about the middle of last year, there was a period of outperformance. So it's easier to pick stocks and trends in a trending market. So that's one. The second is, I think, if you look at the trend again, these are also the periods where mid caps and small caps have done better.
Yes.
So when the mid cap and small cap space is, you know, working well, you always have the, you know, asset allocation to spice up your portfolio to put something into the mid and small cap space, even though your mandate might be dominantly large cap. So that's extra kicker comes from the middle and small cap space. But that confidence you typically have when the markets are reasonably bullish or at least not negative. If you look at the sharp periods of underperformance, it's basically periods like 2018 to 2000, almost 20, almost 2 to 3 years where the mid and small caps got really smashed, you know, in that period. So I think it's easier to outperform when it's a stable and a reasonably rising market. Periods of choppiness tend to, you know, bring out the underperformance patches. That's one. And second is, I think inherently most fund managers are growth biased. Yeah. So if you look at specifically the last 1 year, growth has underperformed value.
Yeah.
Right. The value stocks have come back after a long time. The commodities, the, you know, the cheaper PSU banks, for example.
ITC.
Yeah. So the point is that inherently, I think we are genetically growth investors. Maybe growth at any price, some are growth at a reasonable price. But those are the kind of characteristics I would say. But in the long term, if the Indian economy is to be considered as a growth economy, then I think there is enough scope for stock selection and, you know, to generate that outcome.
Najil, by the way, that data includes fees or not? Doesn't include fees. That's the golden number.
It should include fees, of course. Yeah, it's post fees, of course. So fees, of course, is a big drag. So that's to beat that to beat the benchmark. Yeah.
Okay, gentlemen, we're out of time on this Thursday special Editors Roundtable. Enjoy the rest of your long weekend. But stay with CNBC TV18 as well, because lots more news and updates will be coming through after this short break.